Bandhan Mutual Fund has launched Bandhan Retirement Fund today, September 28, 2023. The main objective of this fund is to live happily after our retirement life. In India, 33% of Indians, that is, 1 in 3 Indians, believe their saving will exhaust within 5 years of retirement. 40% of urban Indians have not invested for their retirement so far. And 90% of Indian above 50 years, they are not starting earlier to save for their retirement. And 20% of Indians don't even know where to begin. Indians' lifespan has gradually increased. In 1980, average lifespan is 53 years. In 2000, 62 years. In year 2020, it is increased to 70 years. In 2040, it will be 73 years. In 2086, it will be 80 years, which means Indians will live happily, healthily till at the age of 80 years. So the lifespan is increased by year. With an increasing lifespan, we need to plan our retirement planning at the age of 20 or earlier 20 years back. If we are retiring at the age of 60, we need to plan our retirement at the age of 40 or earliest. Inflation is eating our all the savings, which means whatever we can buy at the rupees of 10, we cannot buy after 10 years. That is called inflation. For example, 10 years ago milk price was 24, but today somewhere it is 50 rupees, somewhere it is 64 rupees. After 10 years will not be at the same price, it will be increased like 170 rupees. After 20 years it may be 455 rupees. Same way apple price, 10 years back it was 100 rupees, now it is 200 rupees. Similar way, after 10 years it will be 400 rupees. After 20 years it may be 900 rupees. 10 years back monthly expense was 30,000 rupees, that is required, but today 50,000 rupees is required. This will be increased after 10 years, it may be 80,000 per month required, and after 20 years it may required 1,20,000 rupees. This is called inflation. Another major concern is healthcare inflation. Cost of the treatment doubled in 5 years. As per the Asian report, Indians' medical inflation is the highest one. Why we need to consider retirement mutual fund? We need to invest systematically, regularly via SIP as well as lump sum at the age of 25 to 40 years. If we start before that, that is too good. At the age of 40 to 60 years, we can modify our investment as per our income and expense change. At the age of 60 or beyond that, we can withdraw regularly via SWP, systematically withdraw plan, as well as whenever we need, we can withdraw. As well as we can continue to stay invested at the age of 60 or beyond the 60 to generate returns on our remaining corps. This will help us to live happily healthy life after our 60 years. Most of them will prefer to invest in fixed deposit or in debt fund, which are the classic method that will give 7% to 8% average return. For example, if you invested in CRISIL corporate debt fund 15 years back 1 lakhs rupees, that will be 2 lakhs 46,045 rupees now, which is 6.2% of return, and your investment will grow 2.5 times. Whereas if you invested 1 lakh rupees 15 years ago in S&P BSE 200 TRA equity, this investment is now 5,33,817 rupees. That is 11.8% of return. Your investment is now 5.3 times multiple. Traditional retirement products are predominantly overweight on fixed income allocation. For long-term goal, equity allocation may help generate potentially high returns that can beat inflation. Why experts are keep on suggest us to invest at earlier stage? if you look at this image, if you invested 1000 rupees monthly basis, that is SIP, if you started 15 years ago monthly 1000 rupees in SIP, that amount will be now 7,98,932 rupees. Whereas the same amount SIP, if you started in 25 years ago, that amount will be now 35 lakhs 40,484 rupees. The same amount if you started before 35 years, that amount will be now 1 crore 28 lakhs 24,483 rupees. So if you see drastic changes in years, if you invest in 15 years, that return will be normal. But if you start 25 years ago, you will get good return. Whereas if you start 35 years ago, you will get very good return on your investment. You will get very good appreciation on your investment. That is why all the experts are saying start your investment earlier stage. Retirement mutual fund will give many benefit. That is disciplinary investment via SIP and defined withdrawal plan of SWP, that is systematic withdrawal plan. Convenience of monitoring and transaction. Transparency of your portfolio and expense. Diversification of equity and debt fund. It will help to provide relative growth and relative stability. Well regulated industries. Why we need Bandhan Retirement Mutual Fund? This fund is dynamic asset allocation option, so it will invest in equity market as well as in debt market. This fund has model based approach. Actively manage portfolio. This fund lock-in period is 5 years or at the age of 60 years, whichever is earlier. Dynamic asset allocation aim to optimize our return and manage the risk. So it will be invest in equity exposure, arbitrage and debt fund. Important of dynamic allocation is it helps us to only spend time in the market but also time the market effectively. Buy low and sell on high. This picture clearly shows us if the market is performing well at the time. If you buy any stock, it will give average return, that is 10%. But whereas if the market is performing poor, if you take risk and buy stock at the time or invest in any of the mutual fund, that will give 14% or more than 14% of return. That is what this image illustrates us. Finally, the NFO detail is the NFO was launched today, 28th September 2023, and it will be end on 12th October 2023. Lock-in period is 5 years or at the age of 60, whichever is earlier. Benchmark is CRISIL Hybrid 50 plus 50 moderate index. Minimum investment is 1000 rupees, that is lump sum and multiple of 1 thereafter. Minimum SIP is 100 rupees and multiple 1 thereafter. This video is only for education and knowledge purpose. If you want to plan your retirement life healthily, happily, you can analyze this mutual fund, and if you interested, you can start investing this mutual fund. Thanks for watching this video. Keep on watching RN Millionaire YouTube channel to get useful video like this.